What's up, everybody? Welcome to Brofolio. This is officially our first video on the channel, so please be kind to us in the comment section, and hopefully today's tape made it worth the wait. 3 indexes hit all-time highs. Silver ripped 6%. India Prime Minister told Indians to cut fuel, gold, and oil consumption. And the U.S. housing market just hit its biggest seller surplus on record. Let's break it all down. First on the clock, let's recap the U.S. indexes. All 4 major indexes finished green today. The S&P, Nasdaq, and Russell 2000 all closed at new record highs, and the Dow is looking to join the party, with it now sitting at 49,704. This all looks bullish, right? Let's look closer. Only 37.8% of stocks actually finished green today. Less than 4 out of 10. The indexes are at records, but the average stock isn't. That's a real breadth divergence. A handful of mega caps such as Micron, who finished up 6.5%, and other chip companies are doing all the heavy lifting. But underneath the index, we see Dollar General down 7.64%, Nike down 4%, P and G down 2%. This is the kind of setup that historically precedes corrections. This isn't a prediction, but a observation. So what's pulling everything up? One word: capex. Amazon, Microsoft, Google, and Meta combined will spend somewhere between $630 and $700 billion on AI infrastructure this year. That's up roughly 62% from last year's record spend. Roughly 75% of that goes to AI infrastructure: chips, data centers, networking, power. That's why we are seeing semis going vertical. The SOX index is now up 65% year to date and has had 22 winning sessions out of the past 23. Intel is up over 200% in 2026. Micron is up 750% in the past year. Many market contrarian are now saying the magnitude of the markup in semis resembles 1999. In some ways, it's more extreme. They are all warning of large corrections in the coming months. Now flip over to housing. There are now 630,000 more home sellers than buyers in the U.S. / 46.3% gap, largest on record. Records go back to 2013. Miami, 163% more sellers than buyers. Nashville, 120%. Austin, 112. It's officially been a buyer's market since May 2024. But here's the catch. Only if you can afford to buy. Trump's Iran war made this worse. Higher oil prices and inflation are pushing yields higher. Mortgage rates spiked to the highest levels since October. Mortgage applications dropped 10.5% last week, and it's looking like spring selling season is in real trouble. Now here's where it gets wild. The top 20% of U.S. earners account for nearly 60% of all consumer spending. 6 out of every $10 spent comes from the top fifth. Luxury sector, projected to grow 5 to 6% in 2026. Ultra-high net worth individual population in the U.S. grew 5.4% in just the first half of 2025. Saks, Neiman Marcus, Ritz-Carlton, all up. The Hyatt now has 70% of their rooms as luxury or upper upscale. Now, the ultra-wealthy are spending like crazy. Now look at McDonald's. Stock is down 19% from its February 27th high and is near a one-year low. Here's what their CEO said last week, and this is a direct quote. Consumer sentiment is certainly not improving and may be getting a little bit worse. Slash and low-income traffic is still declining. That's the CEO of McDonald's. If McDonald's is feeling pressure, Main Street is hurting. Money was rotating today, hard. Silver ripped 6% to 85.50, a 2-month high. And in the past 12 months, it is now up 154%. That's a fear move. That's a hedge move. That's a stagflation move. Copper closed at a record high, $6.46, now up 13% year to date. WTI oil up 4.4% to 106.42, Brent at 114, and the VIX climbed 7% today. Think about that. The S&P just made an all-time high, and the fear gauge climbed alongside it. That doesn't happen often, and when it does, it usually means to start paying attention. Moving on to international markets. India had its worst session in months. Nifty dropped 2%, but that's not the main story. The main story is Prime Minister Modi made an austerity call during a speech. He told Indians to cut fuel, gold, and oil consumption. Important, emerging market panic often telegraphs what's coming for the U.S. / watch India, watch China, watch what the global money flows are saying. Tomorrow morning, catalyst is 8:30 a.m. April CPI, headline expected at 3.4% year over year, above 3.5, and rate cuts get pushed further out. That hits oil-sensitive stocks and growth tech directly. On the 13th, Trump will be in Beijing meeting Xi Jinping. The agenda will be Iran, Taiwan, AI, tariffs. Any rhetoric out of that meeting could be a major market mover, especially anything about chips, export controls, or rare earths. And moving into the latest Iran drama, Trump called Iran's peace proposal totally unacceptable Sunday. after Iran called their offer generous. The Strait of Hormuz remains closed. Oil is still triple digit, and the war hasn't ended. It just stopped making headlines. Now I want to leave you with this. Mark Twain said, "History doesn't repeat itself, but it rhymes." And right now, the rhyme is loud. In 1999, semis ripped parabolically, just like this. In 1999, a handful of mega caps carried the entire index. In 1999, Wall Street partied, while Main Street started feeling pinched. In 1999, analysts said it was different this time. It wasn't. Today, SOX up 65% year to date, 22 of 23 winning sessions. Today, only 37.8% of stocks finished green on an all-time high day. Today, the top 20% of earners drive 60% of consumption. Today, McDonald's near one-year lows. Spirit Airlines liquidated. Housing broken. And today, analysts are saying it's different this time. I'm not telling you to sell. I'm not telling you to panic. I'm telling you to pay attention. The market can stay irrational longer than any of us can stay solvent. But the rhyme is starting to get hard to ignore. That's it for the first official Brofolio. Thank you for watching. If you got any value, please like, subscribe, and drop a comment. Let us know if you see the rhyme too. Or do you think this time is actually different? It's been a pleasure, and I look forward to seeing you tomorrow.